After a crazy week, the market pulled back a bit going into this week's CPI announcement. Let's talk about what to expect in the market this week. Good evening, my fellow Riz Elite members and all of our subscribers on YouTube. Welcome to our weekly market recap webinar. My name's Chris. I'm part of Riz International, and we're a group of traders who are looking to better ourselves and achieve financial independence through the markets. Now, if you're new to the channel, make sure you smash that like and subscribe button down below. It really helps us grow, and we are trying to get our message out to more and more traders who want to understand what's happening in the market. So let's take a look here at the S&P 500. We obviously started the week off somewhat muted on Monday, but then had a nice little run up with a little bit of a bounce here from this rollover that we saw last week. And then after that, we kind of saw a bit of selling going into Wednesday, Thursday, then Friday, a little bit of a bounce here. So we seem to definitely be trending more towards the downside, whereas last week we're really rallying off of the the statements from the Fed and everything going on with that. Now, of course, Powell spoke this week as well. That was a wild day, if I'm not mistaken. That was on Tuesday. I could be mistaken on those dates. It's been a minute. I've slept since then. But in any case, fairly hawkish comments for the most part. So, the message that we're getting out of the Fed is not very positive. Obviously, they're talking about continued rate hikes moving forward. There will be no pausing of rate hikes at this time. So we should expect more rate hikes this year. How big those are going to be is yet to be determined. Obviously, they want to try and minimize the impact of the market. So we'll probably see more 25 basis point hikes if you ask me. But who knows with this Fed? Really, that's really all there is to it. We don't know what's going to come out of their mouths. And the next thing that comes out of Powell, we never know how it's going to affect the market. And if anybody says they do, they're full of you-know-what. It's absolutely wild right now. Price action has been very difficult to track, especially intraday. Wild swings to the upside and the downside. So it's been very tricky. And of course, later this week, and we'll get to this when we talk about key dates in the market, but the CPI data will be released. So that's really the big catalyst in the market this week and will really determine the direction that we're going to be heading going forward into this month. Now, obviously, there's a lot of things going on overseas right now with Balloon Gate, everything going on in Eastern Europe. So there are a lot of different forces working on the market right now. But yeah, this rally has been rather unprecedented, in my opinion, based on everything that they were talking about. We had a rate hike. Fed was hawkish on their discussion points, and yet the market decided to go up, which makes absolutely no sense to all of us. Maybe it's because they didn't feel that it was as bad as they thought. But regardless of that, we did make a push close to 4,200 here last week, but just did not manage to hold those gains, and we're starting to come back down. So we'll have to see if this downtrend is broken. Obviously, we've been in an uptrend here for the last couple weeks since about January 23rd or so, 23rd, or excuse me, the 4th or the 5th of this month. I'm sorry, I was looking at the year. So my mistake. So basically, since the beginning of February and at the beginning of the year, we've definitely been in a very nice uptrend here. We'll have to see if that continues. If we breach down below here and we maintain below it, then we'll have to see if we come back in below our downtrend line that we had on the S&P 500 that was breached a few weeks ago at the end of January. So we're going to be keeping an eye on that. But honestly, all eyes are on the CPI release later this week. Let's take a look at the breakdown here. Obviously, not too much has changed this week. Energy seeing a nice little rebound here over the last few weeks. And this, of course, is over the last year. We'll zoom in because we do have more data to look at here. Utilities and healthcare basically holding right around the zero mark with consumer staples or XLP, being, let me get this so we can see this a little bit better. There we go. We'll go with the 1 year. There we go. That's a bit better. So yeah, XLP still down. Consumer staples still a little bit below the zero line, but looking to perk up over the last few days. S&P 500 is almost 10% down over the last year, and everything else is underperforming. Financials, tech, real estate. We got consumer discretionary and communications all well below performance right now on the S&P 500. Now let me zoom this in here on the year to date, and to do that I'm going to need to move you a lot closer so we still have this. All right, Now, still can't see it. Well, we'll find it later. Don't worry about it. All right, so here's the year to date. So here's what we're looking at for the year so far on all these breakdowns. And you'll notice this S&P 500 is technically positive on the year so far by 6%. And there's a lot of things that are positive that are overperforming. Real estate, consumer or communications, tech, discretionary, all above the zero line, while we have some other ones here that are starting to perk up. Energy, financials are still above the zero line, but starting to approach the S&P 500, and all of those consumer staples, healthcare, and utilities are underperforming right now. So a bit of a difference, obviously, when we zoom in a lot closer. We can kind of see what's been happening here over the last month and a half, I would say. So definitely it tells a little bit of a different story as looking at it for the last year in total. So it does change, obviously, of course, the closer in we get to it. So interesting to see how things are going. Obviously, we're in the middle of earnings season, and we'll go over that here in a few minutes. But let's take a look at oil and gold. Obviously, gold had seen an absolutely bonkers run-up since about November here of last year. And starting to cool off a bit. We kind of got close to that resistance area that we've been looking at right around 1970 or so. Got fairly close there, but just didn't quite do it. And we've been seeing some selling. Obviously, this is well overbought at this point, in my opinion. Very, unprecedented buying, just going nuts. So a little bit of pullback here is not unexpected. Oil is really not doing anything, honestly. If we just kind of look at it, we're really just kind of stuck in this zone here between right around 70 and about 82. So really no trades here on either gold or oil right now. I know Riz was talking about trading the fade on oil, but very nice rebound this week on oil. So if you did get in on that long, congratulations. If not, now we're not in it either. So. And, I think that's really the big thing to understand right now is it's so volatile. There are so many catalysts going on. It is very difficult to time a lot of entries right now. And I'll just say it again. If anybody tells you they think they know how to do it, I'm going to throw the BS flag on them. Taking a look here at the bond yields, we've seen a nice uptick this week in bond yields on all of the yields that we're looking at right now, which is the 2, 10, and 30-year bond yields. Obviously, the 2-year is still overperforming the 10 and the 30 right now. So we've talked about that inversion several times, so please feel free to reference previous webinars for that. But everything seeing a nice jump up here as the market starts to come back down. The dollar as well really starting to push up here, really looking a bit stronger as of late against other currencies. Of course, this is the currency index, so it is comparing the dollar to all other currencies across the globe. So, seeing some strength here after a lot of, loss from dollar strength here since about last September. So making a big push there. Now let's go ahead and take a look at the key dates for the S&P 500 this week, which are going to be a doozy to say the least. Tuesday is the day, February 14th, Valentine's Day. So somebody's getting an early Valentine's present, but I'm guessing it's not you or me because we've got the core inflation rate year on year and the inflation rate year on year. This is the CPI right here. These are the numbers that people are going to be looking at, and I'm going to be honest with you, I do not buy these consensuses or formats at all. Forecasts, these seem rather low, and I don't think that CPI is going to drop. If it does, I'll be very, very surprised, but that's just me talking. Of course, you do your own research and decide what you think is going to happen, but for me, I'm thinking this forecast and this consensus is a bit low. That's just me. This can be driven, of course, by other things as well, like housing prices and car prices, which have been coming down, I will say. But I'll say that the price at the grocery store is definitely not coming down in my area. We got retail sales month on month being reported on Wednesday. That will be interesting. I think that, honestly, retail over the last month probably hasn't done a whole lot, with a bit of a cool off from the Christmas season, of course. And if I'm not mistaken, Christmas numbers were not as good as everyone was hoping for. Thursday, we got another one, PPI, which is the Producer Price Index, is going to be released. So that's one that tracks the price for producers. So that is, of course, important. Building permits, Riz has talked about this before, but obviously we are seeing, it looks like building permits are going up, which would signify, a good thing. Obviously, the more permits we get, the more the people are building, which would suggest a strong economy, which, of course, as we've talked about before, means the Fed is probably going to increase rates even more because they're trying to cool off the economy. So we'll have to see what these numbers come out as, but I'm very skeptical of these numbers, especially the forecast and the consensus on these. That's just me. I'm throwing my BS flag right now, but we'll have to wait and see whether that actually pans out. Now let's take a look at the big names reporting earnings this week, because not only are we having financial data being released, but earnings continue. Honestly, not too much going on Monday. This is all pretty much a non-starter on these names. Not really impressed by any of them, and I won't be making any plays on any of these. Tuesday, we've got some bigger names you've probably seen before. Coca-Cola being the big one for sure. Really nothing too spectacular other than that. Some companies that you wouldn't really want to invest in. Wednesday, the trade desk will be interesting to keep an eye on. Kraft Heinz, that's a pretty big name. And if you're into biotech, Biogen would be one to take a look at. And of course, if you like donuts, Krispy Kreme reporting before the open, as they should, because the Krispy Kreme should be done before the open. In the evening, Shopify, another big name, and Cisco coming in as well. We do have some oil companies reporting on Wednesday as well, with Marathon and Sunco. We are expecting those to be pretty good as far as earnings are concerned, but that's not to say that we're recommending you go long. Just that oil in general over this earnings season has been doing very well as far as earnings is concerned. Taking a look here on Thursday, nothing too spectacular really to report in the morning. AMAT, Applied Materials, is one to keep an eye on, just to see what's going on there. And then Friday before the open, John Deere, another big name. That one should be interesting to keep an eye on. But honestly, earnings are starting to slow down. As you can see, we're starting to really not have a whole lot of interesting names. Of course, we had the big ones last week and the week before. Those were the real big earnings released. So mostly cooling off a little bit here as far as earnings are concerned. So that's definitely something that we're going to be watching, but not as big a catalyst as the CPI data coming in. I want to go ahead and open it up here to everybody who's live on the chat. Want to take a look at anything, want to talk about what's going on in the market. Now's the time to go ahead and post your questions here. Of course, if you're not an elite member and you want to be, make sure you get on that wait list. Click on that link down in the description. There's a place you can go and get yourself on the wait list for the next time that we open up to membership in Elite. And of course, there's more than you get access to than just watching the webinars. Of course, you get access to our members-only chat area where you can chat with all of our members live. Riz has been doing some live trading sessions, of course, playing all of the economic data that's been coming out. That has been interesting to watch. That's something we do. Of course, you get access to all of Riz's trade ideas, his dip buy list, which is probably the most valuable thing on there that is easily worth the price of admission. And of course, his game plan moving forward for all of our elite members. It's a great service to check out if you haven't, to really help increase your ability to trade in the market and give you some real solid trades to take. I'm not seeing anybody typing any questions, so I'm going to assume that I covered all of your questions and you're all just ready for Super Bowl Sunday. Speaking of Super Bowl Sunday, I don't know why in the world DraftKings decided to report Thursday after close, but I'm sure they'll be reporting on Sunday or Monday morning. I bet they'll be pretty happy on Monday morning if you ask me. So I hope everybody has a wonderful weekend. I hope you're having fun. If you do go out to any parties tomorrow on Super Bowl Sunday, or if you're watching this on the recording and it is Sunday, be safe. Don't do anything I wouldn't do, which gives you a lot of leeway. And we'll see you in the market on Monday.